Hey guys, and welcome to another episode of Founder Stories Business Class. In today's episode, I am alone again. I'm going to be talking to you about financial forecasting. Stay with me. Super important for small businesses, why it's important, what can you do to make sure that if you're already forecasting, are you doing it in the right way? And what are some common mistakes, some common pitfalls? What are my recommendations? So why do we want to do it in the first place? Most people who are running businesses don't keep a forecast, which leads them to be massively inefficient. Why don't they keep a forecast? I think they just don't understand the value of it. It's something that requires work to keep up to date on a regular basis. I'm going to set a stopwatch actually to make sure I don't go over 10 minutes again for this episode. I made some notes, which is why if you're watching on YouTube, I'm not always looking directly at the camera for this one. I want to make these as valuable and succinct as possible. So, growing a business, it's all about measuring your performance through key metrics and adjusting your strategy based on the results. So it's kind of like a loop, if you can imagine that. You measure your results, you adjust your strategy, and you remeasure. You adjust your strategy again, and you remeasure, and you just keep on going like this forever. If you don't have a forecast, which you refer to regularly, how do you know whether you are on track, doing better than expected, doing worse than expected? Where are the risks? Where are the opportunities? How do you know where you're headed? How do you plan for changes? In summary, just as an introduction to why you should do it, forecasting is so valuable. It will empower you if you have a small business to make informed decisions. I'll get on to how to do that later. Manage resources effectively, which if you're in a service business, forecasting is just critical because you need to know when to hire and when to create capacity in your business. Don't do it too soon. Don't do it too late. That alone is enough of a reason for why you should have financial forecasting in your business. It helps you navigate the uncertainties of the business landscape, and we all know that, although that sounds like something ChatGPT wrote, it is an uncertain place running a business right now. So therefore, having a forecast will allow you to get some comfort over knowing what's likely to happen, probably really accurately over the next 3 months, and less accurately over the next 9 months, so 12-month forecast. However, just going through that process, I guarantee you, will enable you to, proactively respond to challenges, capitalize on opportunities, have strategic conversations that you wouldn't otherwise be having with your team members, and so on and so forth. So financial forecasting, hopefully now you can see how important it is. So what are some of the mistakes that people make when it comes to forecasting? Well, obviously, it's super important. It reduces risk and allows you to plan strategically, but only if it's done correctly. Okay, if you are not forecasting correctly, you could get in a scenario where you have terminal under efficiency or undergrowth because you're making the first mistake, which is being pessimistic. I see two types of entrepreneurs. There are not usually entrepreneurs that sit in the middle of this spectrum. You guys are either pessimistic, and you'll know if you're a pessimistic person, or you are overly optimistic. So that leads me to the second mistake, which is not understanding that you sit in one of those camps and therefore creating scenarios with an expert who's outside of your business. So I would create a scenario that is a worst case scenario. And again, do this with a qualified accountant. Create a scenario which is a most likely scenario. This one's probably linked to your weighted average sales pipeline, your committed cost of sales to deliver those sales, your regular expenditure, your staff that you already have on contracts, the ones that you're planning to hire, your contractual obligations for software, for rent, all of these kind of things. And number 3 is not creating a forecast template that is specific to your business industry and your needs. So you cannot use a service business forecast template for an e-commerce business. You can't use a template for a business that is driven by referrals, which is super hard to predict anyway, versus one that drives all of its lead flow and traffic in terms of prospective clients from ads. You need to create a template that's specific to your industry, specific to your needs. It's proven to work, can forecast on a profit and loss basis, a cash basis, etc., etc. Okay, so therefore, you've got a forecast. It's specific for your industry. You understand the value. You're updating it every week, or as and when things change. Maybe it sits in Google Sheets. Maybe you're using a piece of software like Float to do cash flow forecasting. How do you drive, and I would recommend having both, how do you drive all your strategic decisions, or why should you drive all your strategic decisions from your forecast? Well, firstly, how else do you do it? I don't understand how business owners make decisions without reference to the numbers. The numbers are telling you where the risks and opportunities are. The numbers are giving you intelligence. Business owners get stuck growing because they aren't making decisions in the right way. If you keep making decisions with no reference to your numbers, ultimately you will halt growth or fail. But here's how to make decisions off a forecast, okay? Here's how to make decisions from your numbers and do this in the right way. This is why all large, high growth, scaling, successful businesses have finance departments to make decisions off the numbers, and the CFO, Chief Financial Officer, will sit with the COO, Chief Operating Officer, and CEO, and this may all be you right now. The CFO will present the numbers, and they will then have a strategic discussion. They don't discuss strategy before reviewing the numbers, okay? It doesn't make sense. So why are we all doing this? As small business owners, it drives me mad. If you do this the right way, you will increase profit, increase growth, increase cash flow, reduce risk. So create your profit and loss forecast. It's probably quite accurate for the next 3 months, but you extrapolate that for 12 months. Meet every month, ideally with someone outside of your business who's acting like a virtual CFO, and ask certain questions. So you go down all of your sales income lines. Are sales growing in line with our original targets, which we call our budget? If we're exceeding sales targets or we're meeting them, do we need to hire now and create capacity if we're in an industry, a service business? If we're in an e-commerce business, for example, and we aren't exceeding our sales targets and we drive revenue growth through ads, then we drop down to cost of sales and say, okay, well, how much are we spending on ads? Let's dig in deeper. And we go to one of our backing tabs in our forecast template in Google Sheets. What's the return on investment of our ads? How does that compare to others in the industry? What's our ad agency saying? Could we make improvements there? If you guys have seen my cash flow toolkit, it works you through all of those steps. So it says, here's the formula for growing a business. If you understand this formula, we can make sure that we grow a business because we know that profit and cash flow is simply the multiple of these factors. One of those factors will be how effectively, if you're in an e-commerce business, your ads are driving growth. Are you making more money than the spend on the ad? Okay, I'm getting into the weeds here, but we could do a whole separate video on analysing the drivers of revenue growth. Do we need to hire now and create capacity? So now we're going into staff, which should be in cost of sales. If you're in a service business, definitely. Are our expenses to income margins stable? So are we spending the same amount on software, on rent, on people who are not delivery of our primary product or service, because they would be in cost of sales? Are we spending the same amount, or are our ratios getting better? Are they getting worse? For example, are our operational costs more or less than 15% of our income because they were 15% last quarter? Now this will tell us, are we getting more efficient or less efficient? And so on and so on and so on. As a good CFO, they'll have a list of 50, 100, 150 questions. They'll pick the ones that are relevant for your business. They will go through those with you, and the answers to those questions will give you strategic steps every single meeting to become more profitable, to generate more cash flow and generate more growth. Okay, this is what we do at Growth Factor. We don't necessarily meet every month with our clients, but we minimum meet every quarter, and we review the financial performance and we ask these questions. And then off the back of these questions, we create an action plan. What are we going to do over the next 90 days or the next 30 days to improve the areas where we've seen not ideal results, where we've seen good results? Are there any changes we're going to make off the back of that? Or are we just on target? We never come away from these meetings with the decision, okay, there's nothing to change, there's nothing left to do. So what this is called is financial control. You look at the numbers, you make changes, and you add a degree of control and you reduce risk. Okay, financial direction is you look at the numbers and you say, where's the opportunity? Where's the risk? And you drive that as a financial director. Financial director, just as a side note, is just another word for CFO, Chief Financial Officer. The CFO is a US term and it's just becoming more prevalent in the UK. Financial director is a UK term. Okay, so there's my timer. That's 10 minutes. I wanted to keep to 10 minutes. This has been a whistle-stop tour of financial forecasting. If I get anything across today, guys, it doesn't matter whether you're a startup, a scale-up, whether you're turning over 10K a month, whether you're turning over $1 million a month. Everyone should have a forecast. It just depends on the size of your business and the stage of your business as to the complexity of that forecast, the nature of that forecast, the number of backing tabs. Do you need to do cash flow forecasting and all of that kind of stuff? So if this is something you're not getting supported with right now, I would just ask you two things. If you saw value in this video, please like and share it. Just hit that right now. Hit the subscribe button. This is free content I'm creating for you. I know it's valuable because it's based on what's valuable for my clients and my own business. If you want help with what you should do in terms of your own financial forecasting, then just comment forecast on this video wherever you're watching it, or drop me a message. You can find me on Instagram. I don't think you can message me on YouTube. You'll find me online if you look me up. So drop me a message. I'll be more than happy to jump on a financial strategy call with you and let you know exactly what you need to do for your specific business. So hope you enjoyed this episode of Business Class, and I will see you in the next one where we will be discussing, which is super important right now because we're in December, how you can reduce your personal tax liability and pay less tax this January for your self-assessment.